everybody. This is Tony Nash with Complete Intelligence. Thanks for joining us for another quick hit. These are 5 to 10 minute conversations with experts in their field to understand what they're seeing in the global economy, in supply chains, in analytics. Today, we're with Brian Chambers. Brian heads up investment and the accelerator for Capital Factory in Texas. Capital Factory is the epicenter for innovation in Texas. So Brian, thanks so much for joining us. And can you just give us a quick overview of kind of what you do and what Capital Factory is?
Yeah, sure. Thanks, Tony. It's great to be here. Capital Factory is the center of gravity for entrepreneurs in Texas. We help founders and startups by introducing them to their next investors, their next customers, their next employees, and we support them with a breadth of services and mentorship. Since 2013, we've been the most active VC in the state of Texas, and we're heavily focused on what we call the Texas Startup Manifesto. Texas is very geographically unique. We have 4 of the fastest growing cities, also 4 of the largest cities in the whole country. And one thing that we know is that when Texas works together, we can take on any country in the whole world. So we are helping to connect and unite what we call the Texas Triangle. Even though it's 4 cities, it makes a triangle: the North Texas region, Dallas and Fort Worth, down to Houston, Austin, and San Antonio. And by connecting that region and letting resources flow, we think we are unlocking billions of dollars of new value for startups and for investors. And so that's what we're focused on, treating that region like one big startup city, one super city, if you will, and unlocking that value for constituents across Texas.
Very good. And it's great. We have personal experience with Capital Factory. It's a great organization, and we're actually part of Capital Factory, and we found Capital Factory to be immensely helpful. Today, what I really want to talk about, Brian, is how have small innovative companies been impacted by the various kind of problems we've seen over the last probably 4 months, starting with COVID, and then energy fallout and other things. So part of it is that, but part of it is how are corporates responding to that? So let's just get into the first part of it. What have you seen over the past few months? How have small companies, how have entrepreneurs responded to this, and what kind of impacts are you seeing in the ways that they're operating their businesses?
Yeah, well, I always, in my personal experiences, I always say, the best entrepreneurs I've ever had the opportunity to work with, alongside, invest into, or co-founders of mine, are generally 2 things. They're incredibly resourceful, and they're very emotionally intelligent individuals. And I think that those are the 2 critical aspects, characteristics about entrepreneurs that are also going to help them successfully navigate a global pandemic. Everybody's pretty impacted. The impact is significant. And so much that, we've applied a formula internally called a COVID impact score. We ask everybody, it's such a topic, it's almost always the first question or the first topic among any mentorship session or any pitch session or investment discussion is, how has COVID impacted this business and where is it going? How is it changing, right? It's the first question, it's the obvious one. So it's front and center, everybody's impacted by it. Few people are positively impacted by it. Most people are negatively impacted by it. Very few, and a handful, a few businesses as well are just neutrally impacted. It's not really impacting, it's kind of business as usual. But most people fall into that first camp, significantly impacted. And people should be looking in the mirror, thinking very deep about how do we pivot, how do we need to change to capitalize on new opportunities. So I think people have been really impacted. I think it's, regardless of a global pandemic, it's incredibly hard to build a startup and build a successful organization. This makes it even more difficult. And I think we're going to see a lot of companies die faster, but we'll also see lots of new and exciting innovations be born. And I think that's something, as we reflect back on moments of crises, whether it's a terrorist attack, whether it's a just a larger economic problem. We know in the wake of a crisis, major innovation reform happened.
Yep.
Exciting, but it's also painful to get there.
Yes.
I think also the last comment I'll have about it is it's a bit of the great pause. The investment community is confused, and
That's
confused
right.
minds always say no when it comes to making an investment decision or a purchasing decision. And it might not be the product or the service that a startup's pitching, but rather we don't know if this is the right time. We don't know what's going to happen in our business next month or next quarter, and confused minds say no. And I think there's a lot of no right now.
That's right. That's right. That's what we're seeing in the commercial environment. But I think from the investor side, like I yearn for the days of Q3 2019 in terms of investment funding. What a beautiful time it was, right?
It
And
was
it's
fantastic.
just 180 degrees from that right now, which,
That's right.
you know, as an entrepreneur, as a startup, it's an interesting time for us, and it's a matter of just reorienting who we are. And I know Capital Factory is doing the same thing, and other people are doing the same thing. Even big corporates are doing the same thing. Who are we? Where are we going? What are our short-term priorities? And that's really, you know, what we're seeing in a lot of the conversations we're having is, you know, those three things. And many people weren't really sure of their short-term priorities, to be honest, and they just kept, you know, moving along. And so we're finding opportunity in that, which is great. Figuring out how to respond to that has been a challenge for us, but now that we've cracked it, we feel like we're really moving ahead, which is interesting. And I'm hoping that those entrepreneurs that you guys are working with, that many of them can do that. So part of, you know, the next step is, what are corporates doing? How are corporates innovating through this? Are they relying on Capital Factory companies or external innovations to figure this out? Or are they doing that great pause you're talking about? Are they just taking their own inventory in-house and trying to figure out where they're going, whether it's internally or externally?
Yeah. Well, I think it's both. I think it's all of the above. Budgets have dried up, and confusion it still remains. So people are scrambling to figure out how to reprioritize innovation projects. But something so unique is happening in the technology ecosystem, not just in Texas, not just in the nation, but across the world. Innovation cycles are continuously speeding up. They're getting faster. This only makes Fortune 500 companies more and more susceptible to disruption and more uncomfortable. And I think that any major corporation has two strategies, an internal strategy and an external strategy. They must be thinking about both. How do we improve our own processes, our own efficiencies, and continue to innovate and iterate better and faster? But boy, we better look outside. Even if we never have before, we better look outside our four walls, because startups are coming to eat our lunch, and they can do it better and faster than they ever have in the history of the world, and it's happening. So I think we're seeing both of those things happen. I think new business models and new types of firms will emerge, and it's something that, candidly, we find Capital Factory at the center of this intersection. New firms like Capital Factory and our Innovation Council are services that we help provide to startups and to our Fortune 500 organizations, are going to be more prevalent and more required, because it is so fast and furious, and no large corporation can do it successfully without help from new types of partners. So new types of organizations are going to exist to just help corporations understand those cycles, and participate. And I think that's what we're seeing, and I think that's going to speed up.
Yep. I think what we saw initially with COVID especially is a wave of fear. And then I think what we're starting to see now is a wave of humility. You know, we could have done this better, or we need to look outside, or we need to consider that person inside who had that idea, you know, these sorts of things. That initial wave of fear was really 2 months. You know, people were just reacting and trying to figure out how to survive day to day. And I think now they're taking stock and looking back so that they can figure out what their next step is, which is great. Which takes us to our last question: is how do you see corporates operating with external innovative companies going forward? Do you see more action there? Do you see more interest there? Do you see the return of, and I know some companies still do this, but 15, 20 years ago, there was kind of a corporate VC arm in any large company. Do you see that stuff coming back, or do you see these loose partnerships, which we've seen over the past, say, 5 to 10 years or so, continuing instead of that kind of corporate VC arm? It's not all about investment, but I guess generally, how do you see large corporates working with innovative companies, and what forms do you expect that to take?
Yeah, I do have an opinion about this, and I think corporations are going to have to get really great at executing low cost, low risk proof of concepts in a non-production environment. They're going to need to do integrations with lots of startups and rapidly test, and then choose the ones that work well and go scale with them, if not acquire them, or invest into them, support them. Oftentimes a customer contract might be as good, if not a corporate venture capital investment. And I think those things will increase. I think, of course, the global pandemic has brought that confusion, which has brought a temporary pause. But I think if there's, I think we're going to see it continue to accelerate, and we're going to see it accelerate in all areas. Bigger organizations are going to be forced to start engaging earlier with startups and or scale-ups to do those proof of concepts. I think we're going to see more corporate venture capital dollars begin to flow. I think corporate venture capital is still, still at a peak, and I think we're going to continue to see it that way. And I think we're going to see more customer vendor relationships as well, as large corporations turn and kind of get comfortable with working with startups, because the startups are coming to eat the lunch of the major corporations. And again, it's happening, and it's happening faster. And we're watching organizations, if you misstep and a startup happens to get funded, it can gain market share really quickly. And so I think big corporations now, for the first time, are turning around thinking about, oh my gosh, that startup can really compete with us, and we're Microsoft or what have you. And I think that's more true. That statement is more true now than it ever has been. And I think it's only, I think that level of innovation will continue to benefit the, agile, resourceful startups.
Absolutely. Okay. Very good, Brian. Thanks so much for your time. Thanks so much for your thoughts. I really value you spending this time with us. And, if you don't mind, maybe later in the year, we can reconnect with you and see how things have shaken out post-COVID and what's going on in the kind of entrepreneurial ecosystem here. And again, thanks for spending your time. I really appreciate it.
Thanks, Tony.